Did you know that despite making up less than 2% of the American population, Jewish individuals account for a staggering 20% of America's chief executives and 40% of its billionaires? How do they do it? Some might say it's education, others might point to community. But there's something else at play here too. A secret formula for growing wealth that has withstood the test of time and market volatility. This formula is steeped in the ancient wisdom of Jewish tradition, a blueprint for financial success that has been quietly sculpting fortunes for generations. Today, we're peeling back the layers of this rich heritage to reveal how you, regardless of your background, can harness these enduring investment strategies for your own financial growth. Let us delve into the Jewish blueprint for financial wisdom and discover the secrets to long-term financial success. Principle number 1, patience pays off. Did you know that the average millionaire is not the one splurging on the latest sports cars or the flashiest gadgets, but is more likely the neighbor next door who's been steadily saving and investing for decades? It's true. When it comes to money, Jews do not sprint, they do a marathon. This is a lesson in patience and foresight that many of the smartest Jews in business have taught others. Take Warren Buffett, for example.
Recommending that people buy stocks today or tomorrow or next week or next month. I think it all depends on your circumstances, but you shouldn't buy stocks unless you expect, in my view, you expect to hold them for a very extended period.
Although not Jewish himself, his investment philosophy closely mirrors the Jewish ethos of patience and investing. He famously said, "The stock market is designed to transfer money from the active to the patient." This aligns with the Jewish principle of savlanut, emphasizing that true wealth comes to those who wait. In the Jewish tradition, there's a story about Honi the circle maker, who saw a man planting a carob tree. When Honi asked the man how long it would take for the tree to bear fruit, the man replied, 70 years. Honi was shocked and asked him if he thought he would live to see such fruit. The man replied that he was not planting for himself but for his grandchildren, which is a Jewish value that means he was thinking about the future. This narrative is a powerful metaphor for investing. Just like planting a tree, when you invest, you may not see immediate growth. But over time, with care and patience, your investments can flourish. It's about setting the stage for future prosperity, not just for yourself, but for generations to come. Consider the Rothschild family, a name synonymous with wealth and Jewish heritage. Mayer Amschel Rothschild, the family's 18th century patriarch, laid the foundation for the banking dynasty that would last for centuries, not by chasing quick wins, but by carefully cultivating a network of family and business ties across Europe. His strategy was simple yet deep. Do not put all of your eggs into one basket. A maxim that speaks volumes about the power of diversification and the patience required to see such a strategy bear fruit. In today's fast-paced world, where instant gratification is the norm, this Jewish investment rule stands out. It's not about the number of trades you make, but about the quality and potential for long-term returns. By adopting this mindset, you're not just an investor. You're a guardian of the future, planting seeds that will grow into a bountiful financial legacy. So, as you consider your next investment move, remember the carob tree and the wisdom of those who plan for the future. Principle number 2, spread your bets. This ancient wisdom is summarized in the Talmud, where it suggests that one should divide their wealth into 3 parts, into business, land, and reserves. This is diversification in its earliest form, and it's as relevant today as it was back then. The idea is simple. Spread your investments across different areas to mitigate risk. It's like a puzzle, with each piece contributing to a larger, more beautiful picture. If one piece falls, the rest remain intact, preserving the overall integrity and value of the collection. This is the essence of a diversified portfolio. Take the advice of a modern-day Jewish financial guru, Benjamin Graham, often referred to as the father of value investing. He said, "The essence of investment management is the management of risks, not the management of returns." Graham's advice, which is similar to Talmudic advice, stresses that diversification is the key to smart investing because it lowers risk. Let's consider an example that brings this principle to life. Imagine you're at a farmer's market. Instead of buying all of your produce from one vendor, you buy your fruits from one, your vegetables from another, and your bread from a third. This way, if one vendor runs out of stock, you still walk away with a basket full of groceries. Similarly, when you diversify your investments, you're not reliant on the success of a single stock or sector. If one investment underperforms, the others help balance your portfolio. Now you might be thinking, but how much should I invest in each area? Well, there's no one-size-fits-all answer, but the key is balance. It's about having enough variety to protect yourself from market volatility while still being able to manage and monitor your investments effectively. As we continue to diversify our investments and make them stronger, we come across another important piece of Jewish financial wisdom. Principle number 3, the ethical compass of investing. Did you know that the oldest charity fund known to us was a Jewish communal fund established in the 4th century? This tradition of ethical responsibility extends beyond charity and into the very fabric of Jewish investment strategies. It's not about what you invest in, but the moral compass that guides those investments. This principle is about aligning your portfolio with your values, a concept that's gaining traction in today's investment world through environmental, social, and governance criteria. It's a strategy that Jewish investors have practiced for centuries, known as mensch investing. Investing in a way that you can be proud of, in businesses that contribute positively to society. Consider the legendary Jewish investor Sir John Templeton, who once said, "It is impossible to produce superior performance unless you do something different from the majority." To invest like a mensch means to look beyond the numbers and consider the impact of your investments on the world. It's about being different not just in strategy, but in substance. For instance, imagine you're choosing between two businesses to invest in. One has a slightly higher return, but its practices are questionable. The other has solid returns and is known for its ethical business practices, community service, and environmental care. The Jewish approach would favor the latter, understanding that true wealth comes from contributing to the well-being of society, not just profiting from it. This ethical approach to investing can also lead to financial benefits. Companies with strong ethical foundations tend to have a more loyal customer base, lower legal costs, and a more motivated workforce, all of which can lead to better financial performance in the long run. In fact, a study by the ESG analytics firm MSCI found that companies with high ESG ratings outperform their counterparts in the long run. So, if you consider where to place your next investment, think of it as planting a garden. You want to sow seeds that will not only grow, but will also enrich the soil and the ecosystem around them. By choosing investments that reflect ethical practices and social responsibility, you're not just building wealth, you're building a legacy of integrity. As we navigate the ethical pathways of investing, enriching both our portfolios and the world around us, we arrive at a principle that may seem counterintuitive in our non-stop financial markets. Still, this idea has been at the heart of Jewish life for hundreds of years, and it has a surprising benefit when it comes to making money. Principle number 4, rest to rise. Did you know that some of the world's most successful investors spend as much as 50% of their day thinking and reflecting rather than actively trading? This mirrors a Jewish tradition that is thousands of years old, the practice of Shabbat, a day of rest. In a culture that often equates busyness with productivity, this principle stands out as a bright spot for wisdom, reminding us that sometimes the best action is inaction. This concept might seem at odds with the hustle and bustle of Wall Street, but it's been embraced by some of the most successful Jewish investors, like George Soros. Soros, known for his exceptional investment expertise, has spoken about the importance of taking a step back to gain clarity and perspective. He understands that a pause can provide the space needed for strategic thinking and better decision-making. Imagine if you treated investing like a high-performance sport. Even the best athletes know that rest is crucial for peak performance. They don't train non-stop. They take breaks to recover and come back stronger. Similarly, by incorporating regular periods of rest into your investment routine, you allow yourself the mental space to assess your strategy, reflect on your decisions, and come back to the markets with a refreshed and sharpened mind. Studies have shown that rest can significantly improve cognitive functions like problem solving and decision making. When applied to investing, this means better judgment calls, less impulsive decisions, and a greater ability to stay the course during market volatility. So, as you build your investment strategy, schedule in your Shabbat, your time to step away from the charts and the news. Use this time to reflect on your goals, review your portfolio, and consider your next moves without the pressure of the ticking market clock. This strategic pause can be your secret weapon, allowing you to return to the battle with a calm mind and a clear strategy, ready to make the wise choices that will lead to long-term success. Principle number 5. Give to gain. In this final principle, we'll explore the paradoxical power of generosity and how giving can be an integral part of growing your wealth. Here's a thought that might stop you in your tracks. What if I told you that giving away a portion of your wealth could actually lead to more prosperity? It sounds paradoxical, but this principle is deeply rooted in Jewish culture and is known as tzedakah, which translates to righteousness but often refers to charity. This isn't just about being charitable. It's about strategic giving as a way of life and a means to greater wealth. This principle is exemplified by some of the most prominent Jewish philanthropists, like Eli Broad, who once said, "The world is simply a better place when more people feel they have a stake in it and can contribute." Broad, among others, has demonstrated that strategic philanthropy can create networks, open doors, and build the kind of social capital that money alone cannot buy. When you invest in the well-being of your community and the broader world, you're not just doing good. You're also creating a more stable, prosperous environment for everyone, including yourself. The Talmud goes even further, suggesting that giving to charity is equivalent to investing with God, promising returns that are both material and spiritual. While the material aspect might be easier to measure, the spiritual returns can manifest as a sense of fulfillment, community respect, and personal happiness, all of which can contribute to better decision-making and a more profound sense of purpose in your financial endeavors. Moreover, research has shown that companies that give back tend to attract more loyal customers and more dedicated employees, which can translate into better business performance. A study by Cone Communications found that 87% of consumers will purchase a product because a company advocated for an issue they cared about. This shows that generosity can indeed be a multiplier of wealth. In conclusion, these 5 principles drawn from Jewish wisdom, patience, diversification, ethics, rest, and generosity, form a powerful framework for financial success. They teach us that investing is not just about the numbers. It's about how we approach life, our values, and our interactions with the world. By the way, which of these principles resonated with you the most? Do you have financial strategy practices that you'd like to adopt? Share your thoughts and experiences in the comments below. Remember, investing is not just about growing wealth. It's about cultivating a rich life in every sense of the word. Until next time, keep investing, keep learning, and keep sharing.